Yes, that's definitely less of a story for those who seek finance. It has become for the banks more of a story because it has become competitive during the last 6 months, especially with banks having much more liquidity, with much less financial stress in the European banking system. With new players having established procedures and having done first investment, like the debt funds, like insurance companies, there is a deal flow in these non-bank debt providers. So, as an investor, owning a property that has a core plus character, that is available. That is available, not always at the most attractive terms that you were looking or maybe hoping for, but that is less of an issue than it was 12 months ago.
And are you seeing that even potentially in areas where are there areas where you're still not prepared to lend both in terms?
No, I mean, every lender has is this lending policy, and they're not all the same. So do we have, and there are definitely areas and products in France or in the Greater Paris area where we wouldn't finance. But what we are looking for, and that is what most other German lenders are looking for, is of course office, hotel, retail investments, logistics investments in France with a core plus character, and sponsors with a good track record in the market. And there is enough activity in it, yeah, it has become a little bit more competitive, and prices have gone down for finance. Yes. With Chinese money coming in, is not only a question of investment and equity, but also for lending, as it has been the case in the last years in New York. Where debt finance is still restricted is, of course, in Spain and Italy in Southern Europe. That is definitely the case, exactly. Even for core products. But this is, as Guy said, as investment interest is growing in Spain, also banks are considering again lending in Spain, and so do we. On a very limited, restrictive level, but we are having these thoughts.
So you're beginning to look at Spain again?
Yes, we have initiated some internal discussions about that, and with investors having contacted us, and so discussions are going on. And what is a good sign for Spain is that it's not only hedge fund money, opportunistic money, but it's really long-term investors who are doing research and who try to build up a strategy for the Spanish market that will not lead to a wave of investments in the next year, but just that these long-term investors think of it and do the analysis and do not exclude it at first sight. That is already a good sign for Spain.
I think that there is a clear divide, whether in France, because not all the opportunities can be financed. So it's really about core plus. So it is becoming much easier for us to get financing for a central location of Paris, for instance, even for the very, very good assets outside Paris when it's long let. If you're going to Strasbourg, for instance, secondary asset, you won't get financing. We've been trying to sell one office, secondary, very second-hand, to private, who couldn't get financing. So this is clearly a divide within the country, but also between countries, France and Spain. Spain, you were saying this is improving, but yet there's a lack of financing. And if it's not like as the prime market, if it's not let for 3 to 5 years, it will be hard. There are some domestic banks that can provide the loans, because they are the ones who repossessed the assets and can sell it to you and providing a good package. But still, financing is very difficult to get.